happens. On to the currency markets, and with the ECB's latest decision on interest rates looming on the horizon, the euro slumped to a 6-month low against the dollar, currently trading on 84.4 US cents. And this is all after key European officials signaled no early intervention to support the currency. The finance ministers of Austria and Belgium both say that they're not worried about the currency at present levels. The euro is also weak on concerns a report due later will show that consumer and industrial confidence is dropping in the eurozone. Off now to aviation, and there's more pain ahead for struggling Swiss airline Swissair. It's to slash jobs and restructure its management. It's really an effort to save around £200 million a year during the remainder period of this year, should I say. The company's been struggling to return to profitability after the group lost more than £1 billion last year. A series of disastrous investments in some of Europe's smaller carriers plunged the airline into chaos earlier this year. SR, now this is Swissair's parent, has seen its share price slide dramatically, the shares dropping about 60% over the past year. And right now, let's have a look at those shares currently trading on the upside, as you can see from this graphic, up about 1.5 Swiss francs to 134 Swiss francs a piece. Now, in a battle of the aerospace titans, Boeing's beaten rival Lockheed Martin for a multi-billion-dollar Pentagon contract. Boeing won the contract to upgrade the C-130 transport aircraft of the U.S. Air Force. It's the same plane which Lockheed Martin designed back in the 1950s. Analysts describe Boeing's win as a strategic coup. Its shares closing Monday's session 1.5% higher. Boeing shares have been on the rise in the past year. They're up a whopping 70%, and they've managed to outperform both Lockheed Martin shares and the Bloomberg Aerospace and Defense Index. Now let's turn to shares in JGB Sports. This is after the retailer said the total revenue so far this year is up 12% from the same period last year. Sales at stores open a year or longer rose 7% during the same period. JJB closing 33 smaller outlets and city centres and replacing them with 24 out-of-town superstores last year. As a result, the company said it was able to achieve stronger sales, displaying a wider range of goods with fewer supply and promotion costs. Quick look at what's going on as far as those tech markets are concerned at the moment, with a bit of a fallback as far as the tech market's concerned. It's on 2,040 points. Neumarkt in Frankfurt dropping by about 5.5 points to 1765. Now, Europe's major telecoms are anxiously awaiting a key decision from the German regulator today. The watchdog's due to rule how much telecoms will be allowed to share costs following Germany's mobile phone license auction. The companies may be allowed to share infrastructure, and that's a move which could hurt the established Vodafones and Deutsche Telecoms there. However, a deal could be good news for Sonera, Telefonica, KPN and BT, along with France Telecom. All of them together could save up to 14 billion euros. Sharing base stations and equipment could also help newcomers save up to half of what they've been expected to spend. Having a look at those telecoms currently trading in the session, well, Vodafone there up about 1.75%. Deutsche Telekom also slightly higher, with BT declining to £4.40. Well, we'll have the stories behind the headlines in just a minute, but first let's just catch up with the movers in early trade with Guy Collins, and he's standing by live at the London Stock Exchange. Guy, what's it like over there with the FTSE at the moment? Just down a shade, a bit of a mixed session so far.
Yes, good morning. Well, a little bit of weakness in some of the leading FTSE stocks, as we've been reporting since the opening. It's just coming back a little bit, but the FTSE 100 is down 0.1%. We've got the tech mark down a little bit more, down 0.3%. We did have an up day in Wall Street yesterday, but it was on very, very low volume, second lowest volume this year on the New York Stock Exchange and lowest volume this year on the Nasdaq. So not much direction coming out of the US, and we've had a little bit of mixed news this morning. If you take a look at some of these stocks on the move, Kingfisher, for example, is down 0.5%. As we've reported, it's given up on trying to sell Superdrug. Instead, it's going to spin it off. It's going to put it into the demerger along with Woolworths. So some investor relief that they are finally moving ahead with the demerger plan. At the same time, perhaps a little bit of disappointment that they didn't find an outright trade buyer for this. Clearly, they couldn't get the price that they wanted. Kingfisher down 0.5% at 450 and a quarter. New Look is down 3% at 73 and a quarter. New Look has reported a decline in like-for-like sales in the recent period. That goes through the last few weeks. And basically, New Look disappointing investors. It did report a 12% increase in sales over the whole year, but recent trading is looking more disappointing, and some question marks about the product range there as well. Stock down 3%. Take a look at the Great Universal stock, though. This one is up. The figures were better than expected. It reported earnings this morning. It also reported an increase in sales at its US Experian credit checking unit, and it also reported that it's going to be pushing ahead with the Burberry IPO. Now, it announced last November that it would sell Burberry on the market within 18 months. Now it's saying it's going to go ahead with that sale within 12, so effectively it's sticking with the same timetable. So Gus gaining 2% on that news. Take a look at Marconi. This has been one of the big gainers, of course, from yesterday. Marconi down 1% today, just drifting off the highs. Still some concerns out there about general vendor financing issues in the telecom equipment sector. Marconi trading at 357. BAT, this is down 0.5%. There was a court ruling in New York yesterday, which was interesting for tobacco companies. For the first time, a third party, that is an insurance company, won a court case against tobacco companies, and that is, in theory, bad news for the tobacco industry. At the same time, the damages awarded were very small, $17 million. And that was the better news for the industry. BAT just drifting off around half percentage point right now. Oil, of course, big topic with the OPEC meeting starting in Vienna today, two-day meeting. No real change in production levels expected, but we are seeing crude oil prices still up around $28, $29 a barrel. We've got BP flat in the market at 638, and we've got Shell just drifting a touch low at 628. But don't forget, Shell is currently at record highs. Back to you.
Cheers, Guy. Well, running up to 9:15 here in London, 10:15 Central European time. Coming up before 9:30, food distributor Christian Salvesen has won a 10-year contract with Tesco. It's worth £260 million. But the company at the same time reporting a 44% fall in full-year profits earlier today. Find out what the future holds for one of Britain's biggest hauliers in just 2 ticks. We're going to be talking live to Edward Rodrik, CEO of Christian Salvesen, and also we'll be taking a trip to Paris where Nicholas Johnson has all the latest on EDT. Don't go away. You can always check us out on the World Wide Web for all our top stories on Bloomberg.co.uk. Stay tuned.
The FTSE 100 live update with Cantor Index. Online share dealing with a difference. The FTSE 100 live update with Cantor Index. Online share dealing with a difference.
Kelly's off-the-shoulder flat-screen display gives her complete data access. Amber's sporty pop-up touchpad lets her download all her email. Now, Walter, the ultimate wireless CEO.
Not feeling all that comfortable in the world of wireless e-business? Unisys will design a wireless solution that suits you, so you can be on the leading edge and still keep your dignity. Unisys, we have a head for e-business.
For the last 2 years, natural disasters claimed more than 50,000 human lives and cost the world more than $65 billion US. Over 90% of deaths were in the developing world. It is the poor that suffer the most. To help lessen the impact, we need safer buildings built in areas out of harm's way and more advanced warning systems. Our dream is better protection for all. Our dream is a world free of poverty.
Bookmark Bloomberg.co.uk, your number one choice for money news worldwide.
9:15 here in London. That means it's 10:15 Central European Time, and you're watching Making Money here on Bloomberg Television. In a moment, we'll be talking to Edward Rodrik, CEO, Christian Salvesen. He'll be joining us live from the London Stock Exchange to discuss the company's earnings. And also, Nicholas Johnson is in our Paris bureau. We'll have all the latest on EDT. First of all, a quick look at what's going on the markets on what is really at the moment a slight down day for the FTSE 100, the benchmark dropping back about 10 points, 58.46. A bit more weakness also in Germany. Mixed picture there with the DAX 61.72, a drop back of about 5 points. The CAC 40 in Paris, though, doing very well. Don't forget it was closed yesterday for the Pentecost holiday, 44 points high, 54.77. Tech markets tad weaker. Tech mark here in London down 10. Neumarkt in Frankfurt dropping by about 6 points, with the Nouveau Marché just about above the gain line on 17.55, a gain of about 0.5% so far in the session. Well, shares in Christian Salvesen have been on the rise in early trade, on the way up the company after the European logistics firm unveiled full-year results at the top end of expectations and a £260 million 10-year contract with Tesco for more. Let's go live to the London Stock Exchange, where CEO Edward Rodrik is standing by. Good morning to you, Mr. Rodrik. Now, despite a fall in pre-tax profit, you certainly seem to have pleased the markets. What type of year really was it overall for you?
It was a very mixed year, in truth. The reduction in the profits is primarily from one-offs that required us to restructure the business. However, the underlying fall in profits is only about 2.5%, and that was purely from the fact that we were unable to recover totally the fuel costs that we incurred in the accelerated position which took place in the autumn of last year. Other than that, the business underlying is moving ahead very well. We are continuing to expand our footprint in mainland Europe. We are continuing to push forward the logic of shared user operations, and I think that both the marketplace and our potential shareholders are seeing the benefits of that.
Now, you did just refer to those two minor blips in your figures, increased fuel costs. I mean, they weren't just minor, they were fairly major. Increased fuel costs, rising subcontractor costs in Germany and Spain. How much did rising costs really knock off your bottom line, and what can you do to really minimize these risks going forward?
It knocked about £2 million off our underlying profitability. And in the UK, which is a much more mature logistics marketplace, we have over 90% of our clients with automatic fuel recovery. Since the situation in the autumn, which caused the problems in both Spain and Germany, we have increased the number of contracts with automatic fuel recovery. And for example, in Spain now, we have moved up from 40% automatic recovery to in excess of 80%, which protects us more into the future if there is any significant change in fuel pricing.
Now, Mr. Rodrik, you did mention just a short while ago that you're seeing underlying profits growth of about 2% or thereabouts. What are you doing to address that in order to make that figure seem more impressive?
We have expanded our geographic footprint with the acquisitions that we have made now in Spain, France, and recently in Germany. We continue to see opportunities for new acquisitions in order to increase our physical presence in mainland Europe. Our shared user concept is being accepted more by the marketplace and is evidenced by the significant growth in our UK industrial operations. And by focusing on only the best projects in the best locations, we have been an extremely cash-generative business over the last 3.5 years and are using that cash to move out of commodity activities into more value-added focused areas.
Now, would really Britain joining the single currency help you in your business? Is it something you'd welcome?
To be frank, I don't think it will make any significant difference to our business. The vast majority of the operations we carry out are within national markets, and very little movement of goods between countries takes place. In fact, statistically, about 88% of all goods that move within national markets, and that is our focus of attention.
Now, you just signed this massive decade-long contract worth about £260 million, I believe, with Tesco. Tell us a little bit more about that, Mr. Rodrik.
We have been carrying out these operations for Tesco for some years now. The new element of the contract is about £20 million worth, but we have moved forward with Tesco by developing a brand new computer system called Comet, which will control all loose equipment in their supply chain. And as a result of that, they were happy to commit with us for an extension of the contract for a further 10 years at the figure that's been indicated. Core IT systems and the development of IT is core to Christian Salvesen's future, and we have now 4 very strong systems within our business.
Now, Tesco's may be happy, but apparently Sainsbury's and M&S have terminated their existing contracts. What have you done wrong there?
In fact, we haven't done anything wrong in either of those particular contracts. Marks & Spencer have made statements to us that we were one of their best suppliers of services over the Christmas period. But they, as you know, have been carrying out a strategic review, and unfortunately one of our locations for them is involved in that. However, we are expanding our other activities with them, and we have a very good relationship. Similarly, Sainsbury have been pursuing a new strategy on distribution centres, and this process is just a fallout from that. We again have very good relationships with Sainsbury, and we'll be continuing doing other business with them.
Now, we are seeing quite a lot of evidence about over a European slowdown, also one here in Britain too. How is that impacting, and what are the signs out there that you're seeing of the slowdown?
Well, because we carry a variety of goods, what we are able to evidence is that we have seen in our industrial businesses about a 2% underlying slowdown in the marketplace. However, because of our shared user systems, when slowdowns take place, they become increasingly more popular. And so we are seeing an acceleration of inquiry and demand for those operations. What we really were trying to flag today is that when economies do slow down, shared user becomes more popular, and we believe we have the right product for the market at this time.
Mr. Rodrik, how are you staying ahead of your competitors? How are you keeping ahead of the game, if you like?
With this focus on IT systems, shared user operations and cash generation.
Mr. Rodrik, good to see you.
Thank you.
CEO Edward Rodrik of Christian Salvesen, talking about his company, which came out with earnings today and also announced a big deal, a 10-year-long contract with Tesco. Well, taking a look at the time, it's 22 minutes past 9, 22 minutes past 10 over in Paris, where we can head off now, because opposition to EDF's stake in Italian utility Mont Edison seems to be growing. Nicholas Johnson is standing by in our newsroom in the French capital, and first of all, let me ask him what the latest is as far as Electricité de France is concerned, Nicholas.
Good morning. The latest is that the French Treasury Minister at a meeting in Luxembourg, a meeting of the EU's finance ministers, has again said that he wants EDF to reduce its stake in Mont Edison, which controls Italy's second largest power company. So this is really a battle between the countries and the companies.
Now, how did we manage to get here overall?
The key thing is Electricité de France, which wants to be Europe's top energy company. It's already one of the world's largest electricity companies, and it's just slotted a huge mountain of cash over the next few years to expand in Italy, Germany, Spain, and that, of course, is generating opposition from neighboring countries.
Now, what overall is at stake as far as EDF is concerned here?
Well, the key, it's kind of EDF's survival, because the European Union is forcing countries to open up their electricity markets. So EDF knows that it's going to lose market share in France. If it wants to keep the #1 spot, it's going to lose share in France, so it has one option, and that is to expand abroad.
Right, now what happens next, really? What is the EU going to do?
So what we're waiting for is exactly, that's the key, the EU's response. What will the EU say about EDF's move in Italy, the capitalistic move? And it also, we're expecting to make a statement to pronounce itself on the Italian government's plan to freeze or to limit EDF's voting rights. So really it looks like it's up to the EU now.
Nicholas, good to see you. Nicholas Johnson there joining us from the Paris Bureau, talking about Electricité de France and its next move. Let's have a look at what's going on as far as some of the equity sectors are concerned on the FTSE 350, London's broader market, kicking things off with a look at how it's doing itself. It's down about 4 points, pretty mixed out there. FTSE 350 standing on 28.87. Now, these are some of the sectors moving and shaking. IT, hardware, software on the way down. Telecoms, though, gaining a bit of ground. Let's see is moving as far as telecoms are concerned. We have Vodafone on the upside today by a couple of pence. It's on 175p currently. BT, though, on the way down. So fairly mixed as far as telecom operators are concerned. On just to look at how some of the software companies and IT hardware firms are faring. Logica for one down about 10p, £9.33. Sage down by about 3.25 pence, £2.89. Also, just seeing who's perhaps winning out as far as software is concerned. Autonomy up about 20 pence to £5 exactly. Let's move to some of the more defensive issues in play. Engineering, machinery, chemicals and transport. For one, just seeing how British Airways is faring, see how it's impacting on transport groups. And British Airways is down 11.5 pence today, trading on £3.75. Significant downside as far as BA is concerned. Their chemicals lower. Engineers gaining a bit of ground as well as people switch into do a bit of sector rotation, if you like. Let's see as the retailers, property companies and drugs firms. Now, we have GlaxoSmithKline showing some weakness, and that's helping to lower pharmaceuticals. General retailers, though, are lifted up by M&S, which is up a couple of pence, £2.54. Property companies are just down a shade. We're seeing property companies on the sector as a whole on 22.82. Finally, to financials, banks, insurers, and those oil companies, a rise in the price of crude helping to lift the likes of British Petroleum, BP, Amoco, also lift up companies such as Shell as well. Just seeing BP, it's up 2.5 pence to £6.40, and also Shell up a penny on £6.30 there. Well, you are watching Bloomberg Television, broadcasting simultaneously across much of the UK on digital radio. If you've already got such a radio, just look for Bloomberg Radio on the dial. And if you're a newcomer to the UK's growing world of digital radio, check out the radio icon on our website. Of course, that is www.bloomberg.co.uk. And just go to that website and have a look at the radio icon and get some more details as far as digital radio is concerned. Overall, the European market's turning fairly positive at the moment. The DAX up now 5.6183. We're seeing some strength over in Paris, significant strength, 46 points higher, 54.78. Of course, that's the Paris market just playing a bit of catch-up after it was closed yesterday for the Pentecost holiday. Right now, coming up to 9:30 here in London, 10:30 on the continent. We're still ahead. We'll be looking at the UK and European economies as the MPC and the ECB, the Monetary Policy Committee and the European Central Bank, prepared to set benchmark rates, and the euro slides under the carpet once again. Neil Parker, Royal Bank of Scotland, will be in the studio to tell us why he believes the UK shouldn't join the single currency. Join us for that and more.
The satellite shows sunny spells breaking up the cloud over central Ireland and central Britain. Together with a warm front, this gave most parts warmer temperatures than of yesterday. Cloud off southwestern Ireland can now be seen, bringing some showery conditions with the possibility of thunder in across southern and parts of central Britain tomorrow afternoon and evening. It'll be a dry morning with a mixture of patchy cloud and sunny spells for much of Britain tomorrow. Some rain and possibly thunder will, however, spread into Cornwall, with thickening cloud for eastern Scotland and outbreaks of rain in the northwest. Most areas will remain dry with a mixture of patchy cloud and sunny spells throughout the afternoon, although eastern Scotland will be rather cloudy. Northwestern Ireland and northwestern Scotland will see outbreaks of rain. The Highlands is expected to see the coolest temperatures tomorrow, while the warmest area will be the southeastern corner of England.
The Cultural Guide, sponsored by Unilever. Watch this space. The Cultural Guide, sponsored by Unilever. Watch this space.
As the Monetary Policy Committee starts its deliberations on rates, Great Universal backs up evidence of strong high street demand from the BRC. Tech stocks reverse some of the early gains made in Europe after better news on microchip demand from a key US chip maker, and the euro dropping to a 6-month low after key European officials signal no early intervention to support the currency. A very warm welcome to you if you've just joined us. You're watching Making Money on Bloomberg Television. I'm Rashad Salamat. We'll be looking at the state of the UK economy ahead with the MPC's rate meeting, which starts later this morning. And in light of the euro's current slide, we're going to have the help of Neil Parker of the Royal Bank of Scotland. Very quick look at the markets. So first of all, with at the moment the FTSE and the DAX all very much at the moment showing some signs of recovery. The FTSE 100 index, well, at the moment trading just slightly below the gain line. We're seeing it down to about 6 points. The DAX in Frankfurt gaining a similar margin, though. It's up 6. And the CAC playing catch-up after yesterday's holiday over in Paris, up to 54.82, a rise of 50 points so far in the day. Quick look at what's going on as far as high techs are concerned. Techmark here in London down 10 on 2,036. Neumarkt in Frankfurt, well, it's down by about the same amount. It's down about 10 points currently on 1760. Nouveau Marché, well, let's see what's going on there. It's up 10, 1757. Now, let's have a look at some of the main FTSE risers. Gus coming out with better than expected numbers today, with on the upside currently. Trading about 15p higher, £6.13 currently. International power and dimension data also just slightly higher. Also on the way down, though, Railtrack, Telewest and CMG. Telewest's profits, or lack of them, should I say, the losses there, up considerably. CMG also headed south. Let's quickly move to what's going on as far as continental issues are concerned. The main movers on the continent, those trading on the upside: Sonera, ST Microelectronics and Aecon. Sonera rising as we wait for German regulators to decide on infrastructure sharing by those 3G license winners. Those on the way down include Getronics, Infineon and steelmaker Usinor in France. Let's see who's winning and losing as far as bonds are concerned. Quick look at some of those 10-year gilts, first of all. At the moment down just a shade. At the moment the 10-year gilt here in London just down by about 8 ticks. Price at 108.16, a rise of a basis point to a yield of 5.15%. On to currency markets, where earlier in the day we did see the euro touch a 6-month low against the dollar. Right now it's trading just about 0.2 of 1 US cent down on 84.4 cents. The pound really going down with the euro today, following it tick for tick on just below $1.41. The dollar itself a bit buoyed up against its Japanese counterpart, up 37 cents to 119 yen 64 cents. Now, judging by today's SIP Services report and recent retail sales figures, the UK economy appears to be ticking over quite nicely. So why should Britain put all this at risk and join the single currency? Well, one man who thinks we should remain with the pound is our regular guest, Neil Parker, economist at the Royal Bank of Scotland. Neil, good to see you. Anti-euro?
Yes, for the time being. I don't see a need for the UK to join the euro. Certainly, if we take anything from the Danish experience, they've fixed their exchange rate, but it's still obviously very volatile against the US dollar and also against sterling. In fact, the euro has been a more volatile currency since launch, since 1999. Versus the pound, and certainly we've seen the pound making a lot of headway. Do we want to throw all that away, and do we want to give over control of our monetary policy to the European Central Bank when they've made a bit of a hash of it, to be perfectly honest? Well, I'd say no, not at the moment. They have to make a lot of reforms, both within the European Central Bank and also structurally within the euro area as well, and then we might consider it, but for the time being.
Put it to you, Neil, that actually the pound is following where the euro goes these days.
It might be following it, but I would say it might be following it in direction, but certainly not in the scale of the move. The euro makes lows, and the pound seems to hold up pretty well. And we're asking ourselves, is this a strong dollar? Is this a weak euro? And is the pound being dragged down, guilt by association, so to speak? I'd say to a certain degree it is. We do 55% of our business with the European Union after all, but is that a reason to fix our monetary and fiscal policies? Again, probably not. We need some sort of control over our own economy for the time being, especially given that the Bank of England was only made independent some 4 years ago.
But some would say that one of the reasons why the European Central Bank perhaps is not doing so well, and indeed why the euro is not so well, is precisely for the reason that the sterling is not part of the euro now.
Well, that's no reason for the UK to join. It might be a reason for the European Union to want us to join, but as the economic tests that have been laid out by this government, or the current government that's trying to get re-elected, have suggested, it has to be in the UK's economic interest. And I think that it would be destabilising for the UK economy to have the European Central Bank set our interest rates, most likely at lower levels than they are now. And as we've seen from the evidence this morning, the UK economy is in very rude health indeed, certainly from a domestic standpoint.
Manufacturing contracting, though?
Manufacturing is contracting, but it's also contracting in the United States, and it's not having a particularly good time in Europe either. So I'd suggest that manufacturing in many, if not all, of the industrialised world is suffering, and I think it's difficult to compete with companies in Asia that are producing at a fraction of the price.
Just one more question before I bring in Bill Hubbard. Surely the benefits would outweigh actually the negatives, if you like, at the moment, by simply having the virtue of a single currency where everybody can trade. Would have our largest partner, 60% of our exports going to Europe, fixed basically in terms of people could be sure that that is the price they're getting and not be subject to those currency fluctuations.
But you have to fix at the right level, and nobody has yet come up with a level. We hear 270 to the Deutschmark, or the old in old money terms 280 to the Deutschmark in old money terms, but nobody's actually come up with any evidence to suggest that that is a competitive level. And are the European Union going to allow us to devalue our currency by some 10 to 15% to get it into that sort of region before we want to enter the euro? Again, we're talking about putting the UK in a very competitive position. Our European partners might think otherwise about that, and also it would relate to yet another monetary easing. We're talking about interest rates coming lower and the pound coming lower on a trade-weighted basis. That could just overcook the books.
Neil, let's bring in Bill. Bill?
Well, Neil, I guess continuing what Rashad and you have been talking about, then looking at the sterling or the gilt market, we're far more really going to be looking at the election results rather than tomorrow's MPC decision?
Absolutely. I think that it's not so much as who's going to win the election. I think that's a foregone conclusion, but certainly the scale of the Labour majority will have a significant impact on the markets.
Well, Neil, looking at the euro, I know we've heard the saber rattling about intervention and this, that, and the other. We see the situation now with the euro going down. If crude oil stays at $27, $28 a barrel, I mean, they could even be in worse shape, whether it be the June, July numbers, where the CPI is well over 3%.
Yeah, I can't disagree with you there, Bill. I think that there is a significant problem as far as Euroland CPI is concerned, particularly because we're not just seeing this as the effects of oil and also the weak euro. It is second-round effects that are creeping through now. The core measure could even top 2% soon, and I think that would seriously concern the European Central Bank. We can talk about inflation being temporary, but inflation pressures aren't temporary when they've been ongoing for the last 9 to 12 months. We have seen this constant push higher, and I think that was one of the reasons why the European Central Bank last year was still raising interest rates.
Neil, looking at the euro long term, if we start seeing a recovery in the States, whether it be late third quarter or fourth quarter, I'm hearing people talking the euro could have a 7 handle rather than an 8 handle.
Yeah, again, I can't disagree with you there. I think that the euro is in serious trouble, and certainly we would have been expecting things to improve a lot more this year with the US slowdown. That hasn't happened, and as you say, if we do see a recovery third or fourth quarter, then I think the euro is in deep trouble, and yes, we could be seeing it in the 70s region rather than the low 80s as we are now.
But Neil, we're not likely to see the euro actually implemented or Britain brought into the euro for several years yet, and things could have changed considerably by then as the euro really gains confidence, and people, when they actually have the physical currency in their hands, might start believing in it too.
Well, they might do, but I think that the launch of the euro notes and coins are going to be problematic anyway, in that we've already seen in reports that France will only have about half of its ATM machines ready on the launch date. Now that's going to cause problems. Also, a lot of shops and stores, they're still quoting prices in French francs, over and above quoting prices in euros. Some shops and stores aren't even dual quoting as they're being suggested that they should be by now. So I think that the euro could be in for a rough ride for the next 6 to 12 months.
Neil, good to see you. Neil Parker from the Royal Bank of Scotland there, talking to us about why Britain shouldn't join the European single currency. Well, let's move on to some news which is making headlines on the commodity side of things. Crude oil on the up after Iraq halted exports. However, a senior Iraqi official at the OPEC meeting in Vienna has told us at Bloomberg that Iraq is to halt oil exports for just 1 month. The move is in protest against the extension of UN sanctions. The comments coming as officials there trying to reassure world markets that they can cover any shortfall to prevent a global shortage of fuel. But while OPEC says it's unlikely to agree an immediate increase in production, the Kuwaitis say that they're committed to balancing the market.
Always the responsibility of OPEC to stabilize the market and have sufficient supply of crude oil in the market. And for whatever reason, whether it is a political decision such as Iraq or an accident or crisis anywhere that will shorten the supply of oil, it is our responsibility to fill in.
Now, Bloomberg survey shows OPEC cut production by 1.3% to its lowest level in over a year during the month of May. When Iraq is excluded, OPEC production actually dropped by 0.8%. That means that with Iraq excluded, OPEC still actually pumped 2% more than the oil daily quotas in May. And don't miss our special coverage of that meeting in Vienna. We'll get all the latest from our reporter on the scene, Damien Ryan. He'll join us live from the Austrian capital at 12:15 and at 5:10 this evening. Let's just turn our attention to some of the corporate stories making headlines, and it looks like stock market investors will be able to try Burberry's on for size. Owners Gus, Great Universal Stores, confirming a timetable for the launch. Earlier, Chairman Sir Victor Blank told us it's on track to sell 25% of the company in the next 12 months.
Burberry business is looking fine. You saw the results where the profits were just under £70 million. The management team and the whole of the staff there are doing a great job, and we're on track. And we expect that float to take place within 12 months, and probably here in London.
Now the statement quashes weekend press reports speculating that the IPO would be delayed or that Burberry would be sold to a competitor. Gus also unveiled its full-year profits, pre-tax profits before exceptionals coming in above expectations at £487 million. The company's US credit card reporting service Experian made a record profit, and that was despite the American slowdown. Burberry profits also more than trebled. Well, approaching 9:45, it is actually the 5th of June. It is Tuesday, and still to come, we've got John Botham. He is today's guest in Favourite Funds Focus. I'll obviously be asking whether he is related or not. He manages the Horizon European Fund. It's allied to the euro, and we'll be finding out how it's been affected by the currency's latest slide. And Guy Collins will be back at the Money Desk. He'll be taking us through the money flow of HSBC and Lloyds TSB. So check out the money flow with the UK banking sector with Guy in just 2 ticks. Just before we leave things, the FTSE down 4 points on 58.51. The DAX in Frankfurt up 4 on 61.81. You're watching Making Money. Stay with us.
Stir your soul.
R-E-S-P-C-T, find out what it means to me. R-E-S on technology, on business, on news, on Europe. This week, Time is on Generation Europe. Find out what young Europeans think. On Time, on sale every week. Time, Europe's news magazine.
Nine 9:45 here in London, quarter to 11 on the continent. You're watching Bloomberg Television. In a minute, Guy Collins will be taking us through the money flow for two of the UK's largest banks, and we'll also be discussing the Horizon European Fund with its manager, John Botham. He'll be telling us how the falling euro is affecting his fund's performance. First of all, though, let's have a very quick look at the numbers. The FTSE, the DAX at the moment, well, pretty mixed. The FTSE 100 index down by about 5 points, 58.50. Over in Frankfurt, the index for leading German shares, well, on the upside by just about 4 points, 61.81. Paris playing catch-up after yesterday's Pentecost holiday, up a good 53 points, 54.84, nearly a percentage gain so far. Tech indices, well, they started off well and then subsequently went down. We've got at the moment a tech marker down by about 1%. Neumarkt in Frankfurt, well, it's currently trading down by about 10 and it's on 1760. Nouveau Marché playing catch up with the rest of the market over in Paris on 1756, a gain of about 0.5% there. Well, on favourite funds this morning, we're taking a close look at the Henderson Horizon European Fund, which invests in both large and small companies in continental Europe. It is denominated in euros. It aims to achieve long-term capital appreciation with income a secondary consideration. To tell us now more about it, we're joined by the fund's manager, John Botham. John, thank you for coming in. Now, really, you exploit valuation efficiencies on the continent, and tell us a little bit about what that means.
Well, I mean, what we're saying there is that the European markets are still less well developed than the market in the US or even the UK, and as such, we still think there are more valuation anomalies in Europe than there are in more developed markets. Having said that, given the growth of European institutions and the flow of money into European funds, those valuation anomalies are being closed very quickly. We try to adopt a dual-pronged approach, both looking at the top-down economic influences on market and trying to pick up on those valuation inefficiencies.
We'll come to that top-down look in a second, but typically, what are you looking for? A wrongly priced stock? Is that the sort of thing you're looking for?
It can be. It can be a wrongly priced stock, or also it can be a stock which could benefit from a change in perception of the economic outlook, or it could be a stock where there's another particular catalyst, a change in management, maybe a new product in development, maybe a takeover rumor. It can be a number of different catalysts which can prompt the purchase or even the sale of the stock.
You wouldn't be looking at the wrong price as far as, let's say, Total Fino, the Nokia, the world, basically. But you do like oil companies, don't you?
We do. We're modestly overweight in oil companies at the moment. The reason, well, as we all know, the oil price has stayed far stronger for longer, and oil companies have been particularly successful in extracting capital from the business and making the assets they have sweat and work harder. And I think everybody's been surprised by just how together OPEC has been over the past 12 to 18 months, and we think that will continue going forward. So, on balance, we think the oil price will probably stay in the low to mid 20s as going forward from here, rather than the high teens, which many analysts continue to expect.
Preference for Nokia over Ericsson?
Yeah, I think Ericsson potentially is a great turnaround story. But management is still, still fighting a lot of problems, and they still don't have their product portfolio right. Nokia is firing on all cylinders. At some point, it's going to be right to switch away from Nokia, but I don't think that time's just yet.
You tended to stay from the list here of the major telcos on the continent, with the exception really of Orange there. Any reason for that?
We've been very underweight in telecoms over the past 6 to 12 months. Orange has just squeaked into our top 10 in the last few weeks. Why? Well, we're just picking up a few straws in the wind for the telecom sector, which mean that a very underweight stance is probably less appropriate now than it was 6 months ago. CapEx is continuing to be cut by the operators. There's evidence of stabilisation of margins in the domestic markets. And at the end of the day, valuations aren't as stupid as they were 6 and 12 months ago. So there's a few straws in the wind, which meant that we've reduced our underweight position in the sector.
Done very well. I mean, the fund over 5 years, 262% of their But really, I mean, the euro crashing like it is again must be hurting you pretty badly.
Well, yes and no. Sure, if you're a dollar-based or sterling-based investor, yes, the fall in the euro is not nice. But bear in mind that European equities themselves tend to do better when the currency is weak. There's a strong correlation between a weakening euro and strong European markets.
John, if you can hang around for a little while,
sure.
While we now go over to the money desk, I believe, and Guy Collins there. He's just hot-footed it back from the London Stock Exchange. He's having a look at HSB and Lloyd's at TSB, having a look at how institutional money or otherwise is flowing.
Thank you. Just taking a look at money flows, Rashad says, as we do regularly at this time now in the morning, 6:20, 8:35 and 9:50. Taking a look at money flow as well as later in the afternoon. HSBC, it's an interesting one. I've got a graph here which shows money coming into the stock. This is the red line. This is actual flow of money into the stock on the up trades and the down trades. We net it out each day, and you produce a trend line which basically shows that even though we've seen a little bit of drift off in HSBC stock in the last week, you're looking at a 1 month chart here, so basically the decline is in the last week. We've seen continuing fairly strong money coming into the stock on a volume basis. HSBC most recently in the news because it's hiring more than 60 investment bankers out in Singapore, out in Asia I should say, as it faces expansion plans from Deutsche Bank and Goldman Sachs challenging in its core region there, of course. Just want to show you this technical chart here very quickly. We showed this earlier in the morning, but HSBC over the last couple of months is showing a relatively strong uptrend. It is a fairly short-term graph, so you can't read too much into it, but the bottom line is HSBC looking fairly positive on that chart. Let's just take a quick look at Lloyd's TSB, where basically you're seeing the opposite phenomenon. A little bit of weakness coming in the money flow over the last couple of weeks. The stock price has ticked up just this week, as you can see, although it's down 7p today to 720, but over the last 3 or 4 trading sessions it is a little bit higher. Lloyd's TSB, of course, awaiting the outcome of that regulatory review about the proposed acquisition of Abbey National. We should get the results of that later this month or early July. And bottom line is, according to analysts we've spoken to, they're a little bit more confident that Lloyd's is actually going to get this one through. They may have to make concessions, but some of the scepticism we were hearing about in February seems to be dissipating. The results of that in the next few weeks.
Cheers, Guy. Well, it is a big week as far as interest rates are concerned. It's time now to have a look at the Bund and the gilt markets ahead of those rate decisions by the ECB and indeed the Monetary Policy Committee here in Britain. Let's go to Big Bill at the big board.
Well, Rashad, this should be a no-brainer because the market really expecting no change from the MPC tomorrow at high noon. The data we got, whether it be the Halifax this morning, whether it be the retail consortium retail sales yesterday. But Thursday, remember, we are dealing with the European Central Bank. It should be a no-brainer there, but as I say, it is the European Central Bank, so nobody really expecting any move here. And you can see this, as you can see, Bund market being sold off all along the curve, gilt market being sold all along the curve. Really the feeling being is what little activity we're seeing in the short end really was sort of maybe a hope, a wish, a desire that maybe come the first week in July we see a move by the European Central Bank. But really, as I say, waiting to see what the Fed does on the 27th of June. Looks like they'll do 25. Now the market really, with the data we get next week, we get the triplets of terror next week, retail sales, CPI and PPI, and also industrial production on the 15th to see whether it could be 25 or it could be 50 basis points. But as I say, ECB should be on hold. If you're looking at the numbers, really the next move by the ECB probably is not until September. And if you're looking at the gilt, really if you're looking at sterling futures for September, short of 50-50 proposition that maybe we don't get another rate move out there. So the market really doing nothing. And as Neil Parker just mentioned, really the long gilt really more or less interested in what the election is. Do we get a potential Labour landslide? Does that move the Euro referendum ahead? Then do we see all of a sudden long gilt rates heading up towards where Bund rates are? But as I say, very thin trading. Traders got a lot of time to chit-chat rather than trade here. But as I say, MPC on hold tomorrow, ECB hold on Thursday. Really the thing we're looking at is the euro. Euro continues to decline here. But again, let me reiterate, both in the foreign exchange market, in the bond markets, volumes are extremely thin.
Slick Bill back in about a quarter past the top of the hour to talk about oil that time. Now let's return to favourite funds. We're having a look at the Henderson Horizon European Fund, which invests in both large and small companies in continental Europe. It is denominated in euros. Now, staying in the studio is the funds manager, John Botham. John, thanks for sticking around. Really, just having a look at the country exposure you have. We were talking about the individual stocks, which we just go back to with Guy Collins, but you do like France, and you do actually prefer the Netherlands over Germany. Why this lack of exposure to Germany?
It's not a decision that we like France and we don't like Germany. It's purely down to individual stocks. We don't manage this fund saying, right, we want to have X% in France and Y% in Germany. It's purely what
So
stocks and what sectors we want to be exposed
I
to.
would infer from that then that French companies seem to have, some of these French companies seem to be better run at the moment.
At the moment, yes, but that may well change in 3 months' time. I wouldn't rule out that we're overweight Germany and underweight France. Looking at countries plays very much a secondary role in the management of this fund.
Let's bring in Guy.
Let's take a look at a couple of these French companies. You were mentioning Saint-Gobain is one.
Yeah.
Obviously, it's a glass maker. It's a big seller to the automobile industry.
Yeah.
We're seeing weakness in some parts of the automobile industry, but you're confident about Saint-Gobain at the moment?
Yeah, I mean, Saint-Gobain flat glass, which goes into the auto industry and into construction, is probably now less than 20% of the company's business. It's a bigger player in other forms of building materials, industrial abrasives, packaging. So, it's a very well-diversified industrial play. And as such, one particular end market does not play a disproportionate part in the company's sales. But also regarding flat glass, I mean, as a business, it has been rationalised, and there's potential for returns going forward from here to be better than they have been over the past 4 or 5 years. So we're not too concerned by that at the moment.
Okay, Vivendi, another stock you hold, obviously it's attracted a lot of headlines over the last year with the
sure.
Seagram acquisition, bought Houghton Mifflin out in the States last week. At the same time, the stock's been under quite a lot of pressure.
Well, yeah, it doesn't look as if it's done particularly well, but it has outperformed quite nicely. It's outperformed the sector and the market in the first quarter of the year, I believe. Again, it's a big diversified play with a lot of restructuring potential coming from the Universal acquisition last year. And with big chunks of defensive earnings still from the environmental businesses, which it still owns the majority stake in, and it's an interesting liquid stock to play when we're looking to become more positive on sectors such as media.
Okay, and briefly, Philips, you've got that one as well.
Philips, yes, again, Philips is quite a defensive technology stock. We're not positive on technology as a whole. We're still quite scared by some of the valuations out there, but Philips as a stock is valuation we can live with, and we quite like the restructuring which is going on there.
So what sort of valuations would you really like as far as would be it's a very ridiculous question, but what sort of when do stocks become attractive to you on the valuation basis?
I mean, it varies from stock to stock and from sector to sector, and it also depends crucially on the level of interest rates.
I did want to talk about technology, but we are running.
Yeah, okay, sure. I wouldn't like to say there's one particular price earnings ratio or EV/EBITDA ratio which suddenly starts to turn us on. It has to be when the stars align in terms of bond yields as well as particular valuation.
John, good to see you. John Botham there, Henderson's Horizon European fund manager there, talking to us about some of his top holdings. Now coming up to the top of the hour here on Making Money. As we enter the third hour of the trading day, we'll look at the day's emerging themes with a technical look at the markets. Tom Hobson will be joining us from Merrill Lynch. He'll be coming to the studio at about 10:05. Swiss says job cuts placing the aviation sector in the spotlight. Today's stock picker has 2 recommendations from the sector.
It'll be a rainy morning for western Russia and eastern parts of eastern Europe tomorrow. For much of the rest of Europe, however, the weather will remain dry with a mixture of patchy cloud and sunny spells. Central Spain and Greece will have unbroken sunshine. Eastern parts of Europe will continue to see rain throughout the afternoon. Across much of the rest of Europe, it will remain a sunny day. Some showers will, however, be pushing across Biscay and into parts of northwestern France and southern England. Temperatures in northern Europe will be in the high teens, while southern parts and the Med can expect high 20s, with the low to mid 30s across southern Spain. Northern and central Europe will see more unsettled weather on Wednesday, with plenty of cloud and rain across Britain and Scandinavia. France and Germany can also expect some rain showers. The Med, however, will remain dry with plenty of sunshine. Temperatures will rise to around the mid to high teens in the north, reaching low 30s in the south.
While the other news channels count down the days to the election, only one channel still keeps its eyes on the money. Bloomberg. As the parties present their plans, what's the impact on the markets and how will they react? Find out only on Bloomberg Television. Market moving news.
I want to invest the way I invest now, only better. I don't want to pay hidden charges. I want to pay less. I don't even want to pay stamp duty. I need a really flexible investment. And I want to know what my index tracker is worth now, not yesterday. And I also want to be able to track the European markets. iShares. The way you invest now, only better. On 0845 357 7000. Invest now. 0845 357 7000.
O'clock here in London, 11 o'clock Central European Time. The MPC, the Monetary Policy Committee, meeting to decide on interest rates, with Great Universal Stores underlining evidence of buoyant high street demand coming out of the British Retail Consortium. But Kingfisher is one company under a bit of pressure today. The retailer scrapping the sale of its Superdrug and Woolworths units in favour of a spin-off. And Railtrack on the way down. Major broker slashing its price target for the beleaguered rail infrastructure owner here in the UK. Well, we'll be looking at the markets with the help of Tom Hobson of Merrill Lynch in just 2 ticks, but let's catch up with the day's top news. And first of all, let's go to the Bank of England, move to the Bank of England's interest rate decision story. It's really all being complicated by evidence of the strongest May retail sales in 5 years. Even as overseas demand for UK goods is slipping, the British Retail Consortium reports that sales grew 9.3% last month. That builds on a 6.6% rise in April. The figures indicate the fastest rate of sales growth in over a year. Do not miss our special report on the retail side of things later today. Evelyn Brody having a look at why increased consumer spending isn't necessarily boosting profits on the high street. Tune in at 3:05 midday and also at 3:05 for that. Well, let's turn to one of our top stories, and it concerns the retailer Kingfisher. It's confirmed that it's given up on trying to sell Woolworths, Superdrug and its entertainment divisions as freestanding businesses. Instead, it'll be spinning off the three into a single, separately traded company. Kingfisher says the demerger is on track for its second quarter. The company's been planning to spin off the unit since September last year. The stock's lost about 10% since then. Here's a look at those shares and currently how they're trading. Down 4p at the moment, £4.49. That is the state of play as far as Kingfisher goes. Now let's look at the state of play as far as investors who are trying to or want to be able to try Burberry's on for size is concerned. Owner Gus now confirming a timetable for the launch. Earlier, Chairman Sir Victor Blank told this programme it is on track to sell 25% of the company in the next 12 months.
Burberry business is looking fine. You saw the results where the profits were just under £70 million. The management team and the whole of the staff there are doing a great job, and we're on track. And we expect that float to take place within 12 months, and probably here in London.
Now, the statement quashes weekend press report speculation the IPO would be delayed or that Burberry's would be sold off to a competitor. Gus also today unveiled its full-year profits, pre-tax profits before exceptionals, coming in at £487 million. That is at the top end of expectations. The company's US credit card reporting service, Experian, made a record profit, and that was despite the US slowdown. Same time, Burberry profits also more than trebled. Well, let's turn now to some of the day's moving stocks. It's time to rejoin Guy Collins. He's at the Bloomberg Money Desk, having a look at British Petroleum, BP Amoco, which is at the moment gaining ground as oil moves ever upwards.
Okay, want to take a look at this, of course, because we've got the OPEC meeting in Vienna just getting underway this morning. Damien Ryan, our reporter down there, checking in regularly. And we've got crude oil here in London trading at around $29.30 right now on the Brent crude contract, very close to the $30 level. New York crude as well, up at similar levels. And what you're seeing is, of course, this is being reflected in gains in oil stocks, which are trading at pretty close to record highs, some of them. We've got BP here, which is at 639.5. That is pretty much a record in the market, not quite, but close. It's up 1.5 at 639.5 right now, as I said. And if you take a look at Shell, you can see this one is at a record. It reached a record yesterday. It's just inching above that record into new territory, up half a penny right now, 629.5. But the real point here is take a look at where it's come from. And essentially, back in March, April, it was trading at around 530 pence a share, and it's now, as I say, about £1 above that level. Very strong gains in Shell over the last couple of months, and that is pretty much exclusively on the back of higher oil prices. Oil was trading around $26, $27, $28 a barrel earlier in the spring. As I say, it's now heading up towards the 30 area, and concern about supply shortages, concern about OPEC's intentions. We do have a statement from Saudi Arabia that it is very happy with the oil market and has signaled that it'll only pump more crude to make up for a shortage after Iraq has stopped shipments. Iraq, of course, sells around 4% of the world's oil. It's said it's going to stop shipments for a month in protest against UN sanctions, and basically the uncertainty surrounding the oil market looks to be relatively short-term, in that OPEC members are saying they're going to assure supplies. Let's move along to Marconi. I want to take a look at this one because it's been one of the most volatile stocks over the last few days. It is down 9p at 351.5 right now, decline there of about 2.5–3%. You're looking at a year-to-date graph, as it says on the bottom of the screen there. And the point here is that Marconi was a big gainer yesterday, and there was a Sunday business story which is not being confirmed or commented on by the companies, saying that Cisco could eventually come in and make a bid for Marconi, although the Sunday business story did say that was probably some time away while Marconi goes through a restructuring. As I say, the companies have not commented on this. It did lift the stock yesterday. It's drifting off today. Marconi under a lot of pressure last week, along with Alcatel, on concern about the approach that some of these telecom equipment companies are taking to vendor financing. Not perhaps so much a problem for Marconi, but certainly for the industry, these big equipment makers having to find ways of helping their customers to buy their products, basically. And in Alcatel's case, it's resulted in a significant charge in the latest period as they took a hit, basically, on one of their customers who didn't come through with an expected contract. I want to take a look at BAT as well, British American Tobacco. Here you can see this stock just drifting off very slightly. It's essentially flat on the market. It's down a halfpenny at 547.5. And this follows a court ruling in New York, which it clearly isn't having that much of an effect on the market, but it is incremental. It's another step in the story of legislation coming out of the United States. Basically, a Brooklyn jury yesterday ordered a number of leading tobacco companies, Philip Morris, R.J. Nabisco, BAT and others, to pay collectively a total of $17 million in damages to New York's largest insurance, medical insurance company, which is Empire Blue Cross Blue Shield. The story is interesting for two reasons. Number one, it's the first time that a third party, that is an insurance company, has successfully claimed against the tobacco industry. Prior to this, it's been patients or groups of patients, class action suits, that have managed to claim victories. So on the one hand, it opened up a new avenue of litigation against the tobacco industry, which clearly isn't good for tobacco stocks, logically. But at the same time, the damages awarded were very, very small. The complainant had been seeking some $3 billion of damages. They got 17 million, a very, very small proportion of that. So it depends whether you look on this as perhaps bad news for the industry because it's a new avenue of litigation, or good news because the damages were low. Either way, the stock's relatively flat in the market, but keep an eye on the tobaccos today.
Cheers, Guy. Well, let's just move on now because we've got lots of earnings out. Let's catch up with a few of them. And Britain's second biggest cable company, Telewest, has missed its target for new subscribers. It was aiming to sign up 500,000 customers to digital cable in the first quarter, but it managed to reach less than 453,000. Meanwhile, earnings before interest, tax, depreciation and amortization, or EBITDA, rose 17% to £68 million. That's pretty much in line with the city's forecast. But net losses widened. That's really as the company expanded its operations to compete against rivals such as NTL and B-Sky-B. Here's a look at those cable television, satellite and broadcasters currently trading. NTL in Germany on the way down by a whopping 20%, 19.5 euros the share price there. Telewest down by about 3%, with B-Sky-B the beneficiary, 0.75% up on £7.09. The mortgage bank, Abbey National, aiming for a bigger share of the market. The bank is under siege from takeover attempts by Lloyds TSB, saying that it could actually grab double-digit market share. It's also aiming to have 4 million current account customers by the end of 2003. That's compared with 3.4 million customers right now. Currently, it's got about 8% of the new mortgage lending market, and its share of existing mortgages is just over 12.5%. Shares up in Abbey about 40% over the past year, really outperforming both the Lloyds' shares and the FTSE Banking Index. Quick look at those banks in aggregate. Bank of Scotland on the way down, Abbey National and Lloyds TSB2. All suffering a little bit today. Now, JJB Sports share price today on the upside very much so. The sports retailer saying total revenue so far this year is up 12%, and that's from the same period last year. Taking a glance at their shares, as you can see on that graphic, up by about 7% so far. Sales at stores open a year or longer rose 7% during the same period. The company closing 33 smaller outlets in city centres and replacing them with 24 out-of-town superstores last year. As a result, the company is saying it was able to achieve stronger sales, displaying a wider range of goods with fewer supply and promotion costs. Now, there have been some good news out there for the chip sector generally today, as market leader Xilinx saying that order cancellations have slowed considerably. The company jumped 7.5% in after-hours trading following its statement. However, Xilinx says that first quarter sales should still fall 15 to 25% from the fourth quarter. The report comes a week after rival Altera warned last week, well, it would do if the report came out last week, that its second quarter sales would fall more than expected. Let's move on to the aviation sector. More pain ahead for struggling airline Swissair. Now the company is to slash jobs and restructure its management. And what it's trying to do is save around £200 million during the remainder of this year. The company has been struggling to return to profitability after the group lost more than £1 billion last year. A series of disastrous investments in some of Europe's smaller carriers have plunged the airline into chaos earlier this year. S-Air is the parent company for Swissair. It's seen its share slide dramatically. As you can see from that graphic, they've dropped about 60% over the past year. Right now, having a look at the state of play, up just nearly 1% at the moment at SA Group on 134 Swiss francs. Now, staying with aviation, in a battle really this time of aerospace titans, Boeing beat rival Lockheed Martin for a multi-billion-dollar Pentagon contract. Boeing won the contract to upgrade the C-130 transport aircraft of the U.S. Air Force. It's the same plane which Lockheed Martin designed back in the 1950s. Analysts describe Boeing's win as a strategic coup. Its shares closing Monday's session 1.5% up. Boeing shares been on the rise over the past year, up 70%, outperforming both Lockheed Martin and indeed the Bloomberg Aerospace Defense Index. Well, running up to 10:15 here in London as OPEC meets in Vienna and the price of crude keeps rising. We'll have all the latest news from the world of crude oil from Big Bill Hubbard at the Bloomberg Big Board. Also, we'll be concentrating on aviation, and our stock picker today, he is Andrew Lobenberg, analyst at JP Morgan Chase, and he's got a long-term buy on British Airports Authority in the market perform